Hello, my name is Chris Robertson. For the next 10 minutes, I will walk you through an analysis of Jacksonville University's financial and enrollment trends, covering data sourced from the years 2010 to about 2023. This project was completed as part of the requirements for the Master of Science in Applied Business Analytics program, specifically for course DSIM 604, Applied Data Visualization and Analysis, taught by Dr. Vikas Agrawal. In this presentation, I will examine JU's position compared to peer institutions, looking beyond basic numbers to find both strengths and areas of concern. The focus will include enrollment growth, tuition pricing, endowment levels, salary investment, spending priorities, and overall financial health. Visual analytics will help highlight important patterns that might not be obvious from the raw data alone. Since JU just launched the Future Focus initiative, let's start by framing why this analysis matters for JU's future. To start, the data for this project came from National Center for Education Statistics, Integrated Post-Secondary Education Data System, or IPEDS, which is the primary data source for information on U.S. colleges and universities. The focus areas were selected to give a full picture of JU's competitive position and financial health. I looked at enrollment trends, tuition and fees, endowment assets per student, faculty salary growth, spending on academics and student services, and overall financial strength using equity ratios. The goal was not just to gather and display data, but to place them in a strategic framework, identifying risk, highlighting strengths, and offering insights that JU leadership can use to make better financial decisions while entering this new initiative at JU. As I move through the presentation, pay attention to how each financial indicator connects to the others. There's an underlying financial story to reveal. This project is based on 13 years of official federal data from the IPEDS online data system. I selected 9 peer institutions based on size, urban setting, degree types, and Carnegie classification to make sure the comparisons were equal. I used Tableau analytics software to build the visualization charts and dashboard, and RStudio programming tools for additional financial analysis and chart creation. Using both products made it possible to find not just obvious patterns, but also smaller trends that might have been missed with a simple review. Now that you know the tools and the approach, let's move to the first major trend. I will begin where JU shows its clearest strength: student enrollment. Starting with enrollment, JU has clearly outperformed its peer institutions over the past decade. By looking at this line chart, which highlights JU's enrollment in dark green, you can see that from 2010 to 2023, JU's student enrollment grew from 2,900 to about 3,500, which is about 16%. This stands out during a time when many similar schools faced flat or declining numbers. This strong student demand reflects the impact of JU's marketing, its expanding academic programs, and perhaps its reputation for delivering value despite rising tuition cost. Sustained enrollment growth gives JU a major strategic advantage by driving tuition revenues and keeping the campus environment vibrant and dynamic. However, rapid enrollment growth also brings new financial pressures: the need for more student services, expanded facilities, and greater investment in faculty and academic infrastructure. These demands must be balanced carefully against the university's financial resources. Next, we'll explore JU's pricing structure, tuition levels, and endowment strength to see how well prepared it is to support this continued growth. While JU's enrollment growth is a major strength, it is important to look at the cost structure behind it. Here you can clearly see at the top of this bar chart in dark green that JU charges the highest tuition among its peer group, around $46,000 per year, which is about $11,000 higher than the peer median of $35,000. Higher tuition could make sense if it were backed by strong investment in student outcomes or institutional prestige. However, JU's endowment per student at just under $12,000, shown here in this box plot, is much lower than most peers, placing it in the bottom quartile, which means that approximately 75% of peer institutions have higher endowment per student than JU. This combination of high tuition and low financial reserves creates financial risk. Without a strong endowment, JU has fewer resources to offer scholarships, invest in new programs, or handle economic downturns. Over time, this imbalance between price and financial support could hurt enrollment if students begin to question the value they are receiving. Now let's shift to how JU is managing its overall spending, especially when it comes to faculty compensation and operational priorities. When we look at how JU allocates its budget, we find another important pattern. Even though JU's total core expenses, shown here in the dark green in this scatter plot, are more than twice the peer median, shown as this vertical line, only 51% of its spending goes towards salaries and benefits. This is lower than the peer median, shown here as this horizontal line. This suggests JU is putting more of its growing budget into areas like infrastructure, marketing, or administrative costs instead of faculty salaries. While some investment in operations is necessary, underinvesting in faculty can create long-term risk, like difficulty attracting and keeping top academic talent. That can weaken program quality and hurt student satisfaction. This gap between high overall spending and lower faculty investment points to a bigger issue in JU's financial strategy. The next question is whether JU's financial foundation is strong enough to support these choices. And that brings us to equity ratio. One of the most concerning trends is JU's declining equity ratio, as clearly shown in this line chart. In 2013, JU had an equity ratio of 54%, meaning that more than half of its assets were funded without debt. In 2023, that figure dropped sharply to just 27%, meaning that now 75% of JU's assets are tied to long-term debt. Meanwhile, peer institutions have kept their equity ratios much stronger, staying around 70%. A declining equity ratio means JU is becoming more dependent on debt to finance operations and improvements. This creates financial risk, especially if interest rates rise or if enrollment numbers fall, and during times of market volatility, like we are experiencing now. It also limits JU's ability to respond to unexpected financial challenges. Even though enrollment growth has kept tuition revenue strong, JU's long-term financial health is weakening beneath the surface. Keep this in mind when thinking about why JU launched a new Future Focus initiative. Okay, now that we have looked at these individual measures, let's move to a dashboard that brings them together for a clearer view of JU's overall financial position. This dashboard brings together JU's enrollment growth, high tuition level, and low endowment per student into one view. Seeing these factors side by side makes JU's challenges very clear. JU has been successful in attracting students and charging premium tuition. We see that here. However, its weakness in endowment support per student stands out. While revenues are strong today, there is little financial protection for the future. For leadership, this dashboard should serve as an early warning sign. It shows that JU must either grow its endowment quickly or rethink its spending if it wants to protect the progress made through enrollment growth. Considering this, we now know the basis for JU leadership to create the Future Focus initiative. Now, let's take a closer look at how JU has been investing in one of its most important assets, its faculty, by examining salary trends over time. These dynamic control line charts for faculty salaries show both important stability and clear strategic choices. Salaries for all ranks have generally increased over time, approximately 10% over 13 years. You can see this here for assistant professors, where the mean salary is shown by this gray line, and the lower bound and upper bound 95% confidence intervals are shown. It stays within that range. And here for associate professors. However, the increases have been modest compared to JU's overall expense growth. In some years, there are noticeable salary spikes beyond the normal range, such as in 2020 for instructors and in 2023 for professors, which is likely due to policy changes or market adjustments. Overall, JU has not made major investments in raising salaries across faculty ranks, even as tuition and core expenses have risen. This suggests that faculty compensation has not been a top investment priority. Since faculty quality plays a major role in student success and the university's reputation, leadership may need to revisit this strategy. Now, let's broaden our view and see how JU allocates spending between its two largest priorities: instruction and student services. When we step back and look at JU's core functional spending in this stacked area chart, instruction, shown here in bright green, and student services, shown here in bright pink, together make up the largest part of the budget per student enrollment. This is typical for a teaching-focused university like JU. However, when looking at the ratio of student services to instruction spending in this line chart, since 2020, spending on student services has grown much faster. This likely reflects investments in areas like campus life, advising, mental health services, and student support programs, all of which are important for keeping students enrolled and successful. Still, this expansion also drives up cost quickly. With limited endowment funds and already high tuition, JU's ability to keep expanding services without stronger financial reserves is a real concern. Finally, JU is growing its student support programs at the same time is relying more heavily on debt. This sets up the final set of strategic conclusions from the full analysis. When we look at the full financial picture, several important strategic conclusions become clear. First, JU's enrollment growth is real and should be recognized as a major success. However, this achievement covers up growing financial risk. The university's high tuition rates are not backed by a strong financial foundation. JU's endowment per student is low, its equity ratio has fallen, and overall spending is rising quickly, especially outside of faculty pay. These patterns suggest that JU may be stretching its finances too thin. Without real action, JU could lose ground, especially if enrollment levels fall or the economy changes. The action comes in the form of the new Future Focused initiative. Fundamentally, JU cut programs and faculty due to financial strain. The main message is simple. Strong enrollment alone is not enough if the university's financial base continues to weaken. Now let's take a moment to reflect on what this project taught about using data and visualization to uncover risk before they become bigger problems. This project showed how important good visualization is for financial analysis. Raw data and spreadsheets alone would not have made JU's financial challenges as clear. Tools like dashboards, control charts, and trend lines helped spot risk quickly. From high tuition and weak endowment support to rising student service cost and falling equity ratio. Good visuals not only help with understanding, they help leaders take action. When the story is clear, decisions can be made faster and with more confidence. Without strong visual tools, slow financial problems can go unnoticed until they become bigger crises. This project also showed how important it is to organize the story well, starting with strengths like enrollment growth, then showing tensions like tuition gaps, and finally highlighting financial risk. Now, as we wrap up, let's talk about what this means for JU's leadership going forward. In closing, Jacksonville University has a lot to be proud of: strong enrollment growth and high demand for its programs. But with that success comes responsibility. The university now needs to focus on building real financial strength by growing its endowment, adjusting its spending priorities, and making sure tuition dollars are used to support long-term success. If JU keeps relying too much on tuition without building strong financial reserves, it could face bigger risk to its future. Visual storytelling, like the dashboards and charts used in this project, will be important for helping leaders spot problems early and make smarter decisions. Financial storytelling is not just about finding problems. It's about helping to build better solutions. Thank you for your time and attention.